And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. Welcome to December. Let's start off your morning now with some market numbers there. We see oil prices dipped in Asia trade today as uncertainty lingered ahead of Sunday's OPEC Plus meeting. Though easing COVID curves at the world's top crude importer, China, capped price declines. Brent crude there futures fell 25 cents to $86.72 per barrel in early trade, while U.S. West Texas Intermediate crude, U.S. WTI, eased 17 cents to $80.38 a barrel. The benchmark oil contract settled higher by over $2. That was yesterday amid a weaker dollar and optimism over Chinese demand recovery. And moving on to edible oil markets now, we see Malaysian palm oil futures dropped today, snapping 3 straight sessions of gains, dragged down by weaker rival vegetable oil prices and a stronger ringgit. The benchmark palm oil contract, FCP OC3, for February delivery on the Bursa Malaysia Derivatives Exchange fell 2.27% to $939.39 a ton by midday. We'll drill down on the commodities market and drivers later on the show. But first off now, let's start our conversation now. See, the Nigerian Exchange Limited is set to host the 2022 edition of the NGX Made of Africa Awards. To discuss other matters in the industry, we have Mrs. Irene Robinson Ayowale, Business Support Services, Nigerian Exchange Limited, join us via Zoom. Great to have you on the program. Good morning.
Good morning. Nice to be here. Thank you for having me.
Great to have you. So the 2022 NGX Made of Africa Awards, we see it's themed innovation in capital markets, a panacea for exponential growth. What would you say is the philosophy behind, this award?
Very good question. There's several things we hope to achieve through this award. We first of all want to reward our capital market stakeholders for innovation and operational excellence. We also want to emphasize the importance of compliance to rules and regulations, because as we know, you must have compliance in order to ensure you have an orderly market. We also want to incentivize our market operators to do more on innovation and technology. And overall, and quite key, is the sustainability agenda, not just for the exchange, the companies listed on the exchange, but even globally right now. So one of the things we want to do is to also recognize those players who are making an impact in the sustainability space. Thank you.
All right, can you give us a description of the, process, behind determining, winners for the categories?
So the process is very analytical. And so what we've done is that we've come up with data which is analyzed by the NGX Regulation Limited Company, which is the company which regulates our market. We also have an independent auditor from one of the top 4 to ensure that it's accurate and that it's verifiable. So it's quite a very transparent process.
All right. Obviously, after the awards, what are you expecting, for the market now for operators? How do you see them, operating, in the market going forward, after, the whole award ceremony?
What we hope is that it would encourage companies to continue to maintain higher standards, as well as ensure that even their own stakeholders, their shareholders, their management would hold them up to higher standards, because after this award ceremony, we'll have some stakeholders asking some certain companies questions as to, how come we were not among the nominees and things like that. So, we hope that it will encourage more innovation, more excellence, more compliance, and more accountability and transparency amongst all of our companies.
And what else, can we expect, for the NGX, going into, next year? We've seen, 2022 now winding down. How would you, gauge listings, on the exchange so far this year? And what are we expecting, for next year?
Well, so we have had, 2 very good listings this year, as we know, the BUA as well as the Gerigu. Have, very good listings, and part of what we hope to see for next year is more of that. We hope to see more of increased stakeholder engagement from both the domestic and international market. As we know, foreign domestic input is quite critical to our market. We hope to have more intensive capacity building both on our buy and sell side, on our retail and institutional investor base. You will also see us do a lot more around sustainability. We know that right now globally we are looking, everyone is looking at climate, everybody is looking at agenda, and so you see us doing a lot of that as well. You will also see us come out with new innovative technology and product development also around technology. So exciting times for the market with some of the things we're bringing to you next year.
All right, we'll be watching out for all of that. Thank you so much. That was Irene Robertson Yawale, Divisional Head, Business Support, NGX Limited. Thank you so much for giving us your perspective today.
Thank you for having me. Bye.
Welcome back for Commodities Market Update. Now we have Bolanle Agbaje joining us right here in the studio. Bolanle, happy new month.
Same to you.
Yes, so obviously...
Finally, the last month.
Yeah, we're in the last month, and obviously we know the issues from, you know, the whole year.
The whole year, yes.
Still with us.
Very unprecedented year.
Right here. And looking at the oil prices now, we're seeing, you know, some movement as usual, you know, as expected.
Yes, so what's driving, you know, prices right now is the optimism with China. It seems like the protest has more or less yielded in a favorable outcome. China is giving signs that they would most likely, you know, according to Bloomberg actually, that they would most likely, you know, ease out fully the lockdowns by half year next year rather. So it's optimistic, and it's great for us because we know that once China comes back into the market fully, things can actually go back, even though they don't go back to what we had in those pre-COVID times, but at least it will still, you know, be favorable for oil prices in terms of higher demand and, you know, just business activity, manufacturing activity, you know, carrying on as normal.
But doesn't that take oil prices up again?
No, well, yes, it takes oil prices up, and that's great for us because right now we're only focusing on what Nigeria actually benefits from. So we're not a consuming, we do consume, but you know, we're a producing country in any fact. So when oil prices are higher, it's great for us in Nigeria. So
even though the central bank governor said no receipts from oil.
Well, I think Nigeria has a lot of problems that we're still, you know, trying to deal with. But I'm sure, you know, with the new administration, we hope that, you know, they more or less put structures in place to, you know, years and years, we're constantly hopeful of what Nigeria would do. But I think that's all that we have within our power to just hope that, you know, they carry on and put structures in place to make sure that, you know, we benefit from the oil receipts that we get, you know, going forward, and you know, from other agricultural commodities as well.
Yeah, we know we've been, you know, pushing hard on the non-oil
Yes.
exports. That's, you know, beginning to yield some.
Yes, unfortunately,
benefits.
Recently there's been bad news in terms of cocoa. You know, the recent floods that we had seen, we obviously expected this would, you know, impact harvest, but right now we're seeing bad news when it comes to cocoa. We did expect that, you know, during this period from about October to December, when you know, you have the main, you know, crop harvest, we did expect, you know, the harvest to be buoyant, but it's not the case. Farmers had complained seriously about the black pod disease that usually happens when you have constant rain, incessant rain, and, you know, without sunshine, and that obviously brings down their harvest. I think it had reduced harvest by about 15%, although the International Cocoa Organization does expect that, you know, our cocoa harvest would, or cocoa output would total at about 280,000 metric tons. We're still holding on to that, but, you know, feedback from some of these farmers had already, you know, mentioned the fact that their harvest has declined significantly due to the black pod disease.
Right, and you know,
sorry to cut you off there. And obviously, I don't think there's anything you can do when you have, you know, these extreme weather cases. The only, you know, other option would be investment in technology that would actually, you know, protect some of these cocoa beans in times of extreme weathers.
And I don't know. I don't know if you have fuel. You know, at this time, I don't know how you got here, but you know, we're seeing the queues out there. It's still biting hard.
It's still biting very hard, and a lot of the filling stations I passed on the way here, they were not actually selling, but you saw the queues reaching, you know, major, significant numbers, and well, it's a very sad time for us. Like I mentioned, December is usually the time where you do see fuel scarcity. There's always panic buying, you know. And I guess maybe because of the increase in demand during the festive period, who knows? You know, a lot of individuals travel long distances to meet their family members to celebrate the Christmas period. So maybe that's what's happening. NNPC has come out to say that, you know, there's more than enough fuel. They had already, you know, imported enough for, I think, 54 days or something like that, if I'm not too sure. But at the same time, we're still seeing this panic buying, and we don't know why there's this hoarding and there's this, you know, talk about pricing. I think the price now is about 200. You cannot possibly get for about 200 to 300 liters, naira per liter. And it's, I don't know, it's just something to watch and see what happens in the next coming days and weeks.
So it's a tradition to always have that.
Yeah, that has been the tradition, you know, in December. But I think
and we also had, this year,
yes,
earlier in the year.
Yes, we did. But I think going forward, it seems like it's worse than usual, just because, you know, individuals are already, you know, facing the heat when it comes to inflation numbers, when it comes to incomes, just disposable incomes of many individuals. So the suffering is biting hard, and, you know, adding this kind of fuel scarcity is not necessarily going to make things better. So I think that's why you're seeing this kind of a trend in December. We're just entering December now, and you're already seeing this kind of, you know, situation. So we don't know what would happen going forward.
Because you ask yourself, how much can the, you know, household take, you know,
when
at
it
this
comes
time?
to,
How much can the consumers
we do hope
take?
that, you know, the NNPC resolves this as soon as possible, and I'm sure they're working hard to make sure that there's enough fuel to go around, even if they increase the price, as much as, you know, there's fuel around for everyone, and there's no, you don't stifle business activity just because, you know, because of this artificial fuel scarcity lingering.
That means the inflation figures for November,
it's going to be something else. We will release our reports in the coming weeks, but we do expect that, you know, it would inch upwards.
And there might not be any deceleration, let's say month on month. Obviously, it's going to be.
Well, it would be nice to see what the numbers are. We're definitely doing our research, creating our forecast, and then we'll see what the numbers will tell us.
Right. And we saw, okay, we did hear from the Fed, you know, yesterday. They did talk about, you know, raising rates by, you know, not as high,
yeah,
you know, as it's been, you know, in the past. So we're seeing a possible 50 basis points. Mm-hmm. You know, we saw the markets react to that positively.
Yeah.
You know, yesterday, the global market. But what do you think? What do you see going forward? You know, if they actually go through, you know, with the 50 basis point?
Well, obviously, when it comes to Nigeria, it means that all our loans, all our bonds based in dollars, it's obviously be more expensive for us. So emerging markets, you know, it's not necessarily great
because it's still
us.
A hike regardless.
Yes, it's still a hike regardless. But obviously we would welcome, you know, a smaller hike. But I think the reason for that is because whatever they've been doing in the past in terms of the hiking of the rates, they're actually seeing the benefits. And we do hope that, you know, in the year 2023, these hikes would more or less either stop or, you know, there'll be slight easing, you know, in the US economy, because at the end of the day, a lot of our debt is based in dollars, and it's not necessarily great for us. Even with oil prices, there's an inverse relationship. When you see, you know, the dollar get more expensive, it means that the demand is likely to fall, because it means buying oil will be more expensive, and that's not necessarily great for, you know, a producing country like Nigeria. So yes, so it's not necessarily, and obviously notwithstanding the fact that the hot money flow that we do want in Nigeria is not going to be flowing here if, you know, the US is still hiking rates and is still making it favorable for investors. It means that the competition is more and more intense for countries like us.
All right, we'll be watching out for that, you know, in the December meeting, which is we're
I think 14th
practically,
of December, yes.
You know, here already. But talking about the US dollar, we're seeing the naira there depreciating again.
Yes, you know, right now our external reserves is currently at about $37 billion, and it's still falling. The CBN is still trying hard to, you know, defend the naira as much as it can, but obviously the favor is not, the odds are not in our favor in terms of, you know, the depreciation, and we still import a lot. The fact that, you know, a lot of our imports comes from, you know, some of all these countries means that you know, the depreciation factor will still be there lingering because nothing more has been done. We do want, or what we do want is, you know, a unified exchange rate at some point to more or less reflect exactly what's going on in the market and create a uniform situation in Nigeria, especially for investors, you know, make them more informed about and more confident in investing in Nigeria. And obviously, when that happens, you get more money, more dollars flowing into the economy, and that can ease out the naira. But that's not what we're seeing now. It'll be nice to just see what, you know, the CBN does in the coming months after the release of the new naira notes, and after the elections, we'll see where the economy balances out.
And obviously, I was going to, you know, talk about, you know, after they've mopped up, you know, all of those new notes,
yes,
and the old notes, and
yeah,
you know, they have most of, you know, the currency in circulation, you know, within the banks. What can we see, you know, for the monetary policy going forward, and would this reduce, the pressure on the naira?
One benefit of this is, as you've brought more money back into the system, it means that whatever policy rates that you make would be will be felt more in the economy as opposed to what has been happening in the past few months. So I think one thing and as much as obviously getting all those hidden cash, you know, the corruption and all that. So we do hope that, you know, there's still some sort of positive news that comes with this, you know, money in circulation. I think the banks I saw a report that mentioned that the banks are supposed to now extend their closing time to about 6 p.m. So obviously that already shows you that there's a lot of activity within those banks and there's more money coming into the banking system, because in this day and age, the banking system unfortunately is at the heart of, you know, the economy and the heart of monetary policy. So when you get more people, more individuals in the economy, you know, becoming more, or there's more activity in the banking system, then it means that, you know, whatever policy that you make would be, you know, translated to the world economy.
All right, we'll be watching out for all of that. But let's look at some other commodities now. We see copper there heading for the best month.
Yes, you know, we're seeing a fact that there's increased supply from some African countries, and the fact that, you know, as much as you're seeing this increased supply, you're also seeing prices increase significantly as well. So that's obviously great for, you know, those countries that do produce copper, but it's I don't think Nigeria's production is, you know, scratching the surface for such product. But I think the good news as of today from our recent research is the fact that domestic commodity prices some prices have declined, not significantly, but I think there's a decline. But I think the fact that, you know, we're not seeing that demand in the markets, it seems like the traders are, you know, recognizing that and, you know, bringing out prices slightly. I think the price of rice, onions, beans, although we had seen the price of tomato decline in the previous week to, I think, previous 2 weeks, so that had, you know, followed a declining trend. But now we're seeing rice, beans, and onions join, you know, that space, and it's good for us because it means that, you know, the individuals, any you know, fall in price will be welcomed by the individuals.
So at least we can have our jollof rice, you know, for Christmas,
the staples for the Christmas,
you know, chicken period. And all of that.
Yes.
All right, Bolanle Agbaje, thank you so much
for
giving us all the updates from the commodities market. Now to our next conversation. In 2021, the federal government of Nigeria introduced a sugar-sweetened beverage tax. It's embedded in the Finance Act of 2021, which levies a 10 naira tax on each liter of all non-alcoholic and sugar-sweetened carbonated drinks. Some have raised concerns about the negative impact it would have, you know, on the sector, while some applauding it, you know, saying it will reduce the risk of diabetes and all of that. But let's talk to Taiwo Oyedele now, fiscal policy partner and Africa tax leader, PwC Nigeria. Join us via Zoom. Great to have you on the show.
Thank you, Ladi. It's a pleasure to be on your program.
Good morning. So we're getting, you know, different reactions, you know, about this sugar tax. You know, these companies, we've seen the Manufacturers Association of Nigeria talk about how this is going to bring down, you know, that industry to its knees. How are you seeing this?
Yeah, thank you very much. You know, just to take a step back, the federal government has imposed excise duties on a number of products, particularly tobacco, alcohol, and spirit, for a number of years. Then last year, government decided that they need to impose excise on non-alcoholic beverages. So there was a lot of back and forth with the industry players trying to provide the data to show that it wasn't the right time to do it. Maybe government shouldn't even be thinking about that at all. If you look at the report by the NBS, National Bureau of Statistics, that was released a couple of days ago, it shows now that the manufacturing sector is in decline with a GDP of minus 1.91%. And in fact, the food, beverage, and tobacco subsector of the manufacturing industry is even in a bigger decline of about almost minus 4%. So what we have seen is since government introduced the 10 naira per litre, we have seen a decline in that subsector because they're having to deal with a myriad of issues anyways. Man also said that this year alone, the amount they're spending on diesel alone has increased by about 400%. So this new excise of 10% kicked in just a few months ago. And to the surprise of many of us, including especially, as you say, the industry players, government is then proposing a further increase to the increases that they have already announced, because in the 2022 Fiscal Policy Measures and Tariffs Amendments Directive issued by the government, they indicated the rate for 2022, 2023, and 2024 for non-alcoholic beverages, tobacco, and alcohol. So all of us thought that the right thing to do was to allow that roadmap to play out rather than having to interrupt it midway and increase the rate, especially when the economic circumstances are not getting better, but rather deteriorating.
And obviously, we know the federal government now, struggling with raising revenue. At this time, we see that the central bank governor did say the receipts from oil right now is zero. So obviously, there has to be some, balancing act here. Government trying to raise revenue, but also you don't want to tax, businesses out of business. How do we do this? How do we go about this?
Yeah, that's a good question, Ladi. So on one hand, I think every single person, including business owners that are being targeted for these taxes, agree that government needs more revenue. There's no doubt about that. But the discussion is, what is the best approach to be able to do that? By the way, this sector that is bearing the brunt of excise duties on their products already pay far more than the average for other sectors. Tobacco, for example, pays almost 5 times the average contribution of other sectors to taxation in Nigeria. So they're already bearing a high burden. And in fact, the excise duty on tobacco was increased by 95% between last year and this year. So you can't do all the increases in 1 year. And the amount that government is seeking to raise, all things being equal, that is, if demand does not, shrink further, it's less than 90 billion naira. When we're looking at the account of NAPIMS, which is just a subsidiary of NNPC, that's the equivalent of what they spent on public relations last year. So where government can make money from is not overtaxing the companies that are trying to create employment, that are trying to help us revive the economy, especially the ones that are labor intensive, such as food, beverage, and tobacco sector. What government needs to focus on is, first, how do you reduce inefficiency? How do you harmonize the tax system? As we speak now, even based on the 2023 budget, about 63 MDAs have been asked to go and collect revenues. I don't know of any country where you do that. What happens with that approach is these guys will then forget sometimes their primary mandate and keep imposing all manners of charges and levies on businesses, making it difficult for them to do business. Because they are not trained and equipped and skilled to collect taxes, you see a lot of leakages. Many of them use consultants with ridiculous amounts of commissions. What you need to do is harmonize all of that process and then use data and intelligence to make sure that everybody pays what you currently have in the law. Otherwise, the more taxes you impose, the more those who are trying to do the right thing and pay their taxes become less competitive because they're operating in the same market that others are operating in and not fully tax compliant.
And yesterday, we did get that interesting outcome from the Federal Executive Council meeting. We did hear that there was some kind of blame trade, about what Nigerians are going through, right now between the state and the federal government. And I'm wondering, how can they synergize, their activities to make it better for the average Nigerian?
Yeah, that's one thing that we don't do well in Nigeria, and it cuts across. I'm not blaming only government, but I think it's worse in government because of the impact. is not using data for making decisions, right? So you want to fight poverty, and I don't think it's a blame game between federal and subnational. You have to do it together. When the life of Nigerians are difficult, or they don't see prosperity or hope, they don't care whether it's local government or state or federal government. They just know that government is not working for them. So there has to be a handshake. You know what you need to do to lift people out of poverty, provide healthcare, provide education, living standards, some of them as basic as safe drinking water, right? Employment and address insecurity. So this sector we are talking about now is labor intensive. When you have unemployment that is contributing to poverty, it's not the time to then impose taxes on the people who are creating those jobs in millions. And if you also use data for decision making, you would also see that when government increased the excise duties on these industries, because their capacity went down as well as their volume, their VAT contribution reduced. Their company's income tax reduced because profits went down. Overall, government was actually making less than they were intending to make overall. So using data for decision is going to help us in more ways than one, whether it is fighting extreme poverty, whether it's creating employment, whether it's addressing tax policies. We just have to respect data and use that for decision making at all times.
Going forward now, do you see, more taxes coming?
Sadly, yes. And I will really, really strongly advise government that this is not the right time to introduce and impose new taxes or increase the rate of existing ones. What we're seeing around the world are countries trying to either freeze the rate or even reduce them. Because on one hand, you have an economy where we have a lot of challenges. You have rising inflation. So if you increase VAT, you impose excise duty, those ones have impact on inflation, even escalating it further. So government should then rather focus on how can you generate revenue without increasing tax rates and without imposing new ones. And I'm confident that if government can just harmonize tax rates, harmonize tax collection agencies to be only one agency collecting taxes, use data and intelligence to find out who is not paying taxes, we would significantly move the needle on revenue generation without creating problems for businesses that need all the help that they can get, especially at this time.
You've been protecting households and the poor also. But thank you so much, Mr. Taiwo. You're the fiscal policy partner and Africa tax leader, PwC Nigeria. It was great having your perspective this morning.
Thank you very much, Ladi.
Thank you. All right, now let's head on to the markets. Quite a good close we had yesterday for the month of November there. We saw the NGX, that the equities market actually closed in the green for the month. And we have Anita now to give us the details. Anita, you did say,
good morning,
you did say November was going to end, in the green.
Yeah, no, well, of course, that's the last trading day of November.
The last trading day of November.
Yes.
And now we're in December.
December, can you believe it? And that's counting down, you'd say it's about 30 days and some few, hours to the end of the year. So of course, when you take a look at that, you also take a look at what to expect in the new month, particularly when you had a very good month for November.
Do you think Santa is preparing some kind of
Well, you never can tell. These days, it's a world of change. So I wouldn't expect, maybe the ice has melted and Santa has lost his way down here. But the market has so many surprises. So most likely, we may see, we may not see. Just keep our fingers crossed.
All right, watching out for it.
Okay. So now, with that being said, this is how the market closed for midweek trading session, the last trading day of November, 0.71%, which is in valuation terms, in value terms, it amounts to about 183.59 billion naira added, recovered from the two-day back-to-back profit taking that we had on Monday as well as on Tuesday. So, but for Wednesday, the market was propelled back into the green territory, which you can see across the two key indicators of the NGX here. Now, this was largely driven by the bargain hunting for the share price of MTN Nigeria as well as some other market bellwethers. So there you have it, more than 0.5% increase on the all-share index. Now flipping over to the sectoral performance, mixed picture there. Now you saw the banking counter, the tier 1 lenders made this 1.79% upsurge on that counter, the banking counter of the NGX, while the industrial goods, it was barely in the positive territory, not much change from what you had on Tuesday, but at the same time, it was in the positive. But what you see there was 0.0% positive. But in the consumer goods, we have some profit taking there, as well as the insurance sector, while the oil and gas sector, as you can see there, is unchanged. Now, we also have the year-to-date is in the positive territory, 11.757% is what we have now. Month-to-date, well, it's the start of a new month, but for the month of November, it was up by 8.7%, rebounding. At some point, we've fallen to about 8%, but now we added about some 0.7% rise to the market's overall performance. Now, we will be talking to our investment analysts to give us more insight. But now, let's take a look at the activity chart of that market. In terms of activity, the volume of trade carried out for midweek trading session was down by 11.5%. Value was down by 19.97%, while the only green that you had was on in terms of the deals, the number of deals that were carried out there, the participants for that market. So now that's for that market. Let's move over to the smaller unlisted securities market, the younger brother of the Nigerian Stock Exchange. It remained unchanged in contrast to what you had. In contrast to what you had, it was a 1.27% loss that you had on Tuesday, but it was unchanged at this, while the market cap is still below the 1 trillion naira mark. Now let's talk to Moshood Kazim, who's an investment research analyst at Meristem Securities, to give us more insight into how the market turned out for the whole of November, as well as what to expect in the month of December. Thank you for joining us, Moshood.
All right, good morning, Anita. Thank you for having me.
Yeah, I'm sure investors are quite impressed with the month of November, if I'm correct. But at the same time, we saw some pockets of profit-taking. We saw so many activities that almost dented the market's performance. So now give us a run-through into the month of November and what to expect as the month begins, the new month of December begins.
All right, thank you, Anita. So yes, after 5 consecutive months of decline in the equities market, the month of November actually saw investors coming into the market and buying activities actually took place in the market. We saw the month we saw the all-share index closing the month up with 8.72% month on month to close with a market cap of 25.96 trillion. So that means like in the month of November, investors had gained about 2.08 trillion naira. That was what was added to the market capitalization in November. Yes, like you rightly mentioned, on a sectoral basis, we saw tickers in the financial services, tickers in the industrial goods sector, and also some telecom sector also like driving the market growth. Specifically, we saw Danksem gaining about 19% month on month in November. Also, Airtel Africa also gained 13.73% in November, as well as GTCO, which gained 13.6%, and also Bar Cement and MTN also gained. So we saw tickers across those sectors driving the market higher, and of course, there was a backdrop to the positive sentiment that we saw in November. So what I mean is that prior to November, in October, towards the end of October, we saw earnings releases in the month, and which was broadly positive. So investors sort of considered that and judged the fundamentals of those tickers and on the local market on the NGX as still sound, which they factor into the month of November, into the activity in the month of November. Also, another interesting backdrop to the market was that October actually saw the huge decline of October actually saw the market crashing up to like the 2018 resistance level. And judging by the technical factors, we saw that acting as a support, and which was actually sort of led to the gains that we saw in the market. So that level, the 41,439 level, sort of acted as a support for the market in November, and we saw the market rallying from there.
Okay, Moshood, sorry to cut you there. So because we have just about a few seconds to end that market segment. So now as we enter the month of December, what are we to expect? Do we see the bull still riding on that part of the victory, or do we see the bears resurfacing and taking over? Don't forget, it's a month of the Santa Claus rally. Should we expect the Santa Claus rally in the month of December?
Okay, I think the positive sentiment on the market is still in the early days, but we can expect the market to build up on that momentum. And basically, judging by what happened in the prior week, we saw with the rate hike, we saw the market shoving that aside and still gaining. So investors have sort of priced some of these market risks into their pricing. So, of course, the month of December comes with a whole lot of spending, and there will be increased demand for cash, especially, and we might expect some sort of lower liquidity in the system. But overall, I still believe that the buying investors, given the attractive level that the market is at, and given the burgeoning, building up of momentum in the market, we can see this continuing in November.
Okay. Okay, thank you for that analysis. And then, of course, we are looking ahead for a positive close in the start of the new month of December. So that was Moshood Kasimi, investment research analyst at Meristem Securities Limited. So now, for that market, let's move over to the fixed income market. For the fixed income market, there we have okay, let's continue with the unlisted securities market. At the close of the trading yesterday, we had the value is a decline by 98.49%, which is what you see here, 14,508. The value is still slightly higher, 657.43 deals. Well, 4 and stocks traded 3. Now we had no gainer and no loser, but we had the top trades being Friesland Campina Wamco, which had more than 70,000 securities traded for that market. So that's it, Laddie, for the small and listed securities market.
All right, so now I need you to dust your crystal ball.
Okay.
First trading day of December, what are you expecting?
Well, it's too close to call because, of course, you have, yesterday we had a positive market breadth. But fingers crossed, I think the market is still going to sustain by a smaller margin, because some of the losses had made the markets to, attract some.
I'll be watching out. I'll be watching out for that. Thank you so much, Anita. All right, that was Anita there giving us the details from the market performance yesterday and looking into what we can expect for today. Let's head to London now. We have Juliana standing by right there. Good morning, Juliana, and happy new month. Well, we got that poll from a leading housing charity. We found that nearly 1 million private renters in England are under threat of eviction. Tell us more about this.
Yeah, good morning, Laddie. Happy new month to you and our viewers. Pretty shocking data, actually, released by Shelter, which is a homelessness charity in the UK. They've conducted a poll partnering with YouGov, and it does reveal that 1 in 12 private renters in the United Kingdom could be facing eviction in the next coming months, which, again, is kind of adding more picture to the pretty bleak cost of living crisis that we're currently going through. According to Shelter, they are receiving an average of at least 2,000 phone calls a day, pretty gut-wrenching phone calls from mothers and fathers who are skipping meals, not paying bills so that they can pay their rent. And this is up 80% from where it was from this time last year. So it does show that the cost of living crisis, high inflation, stagnant wages is really impacting those who are affected most. And now, according to the charity, this is all the government's doing, that the government had an opportunity to unfreeze housing benefit rates, and housing benefit is a benefit that is given to those on no income or universal credit, so that the government essentially are paying the landlord to stop you getting kicked out of your home. That's all changed because we've come out of restrictions, but people are still struggling. And of course, going into Christmas, going into the new year, nobody wants to be homeless. So this is another on top of so many issues that are already in Rishi Sunak's in tray that he must tackle, and swiftly.
Right, and we did get some, good news yesterday. We see the Eurozone inflation there fell for the first time in 17 months. We've seen, inflation also in the U.S., moderate. Do you see that happening, in the UK going forward?
Well, we hope so, but it's not likely to come anytime soon. We just had data, didn't we, yesterday from the British Retail Consortium saying that the cost of fresh food is been driven up by about 14.3%. But there was a little bit of good news for those in the Eurozone area. Yesterday, for the first time, as you said, in over a year, we saw that inflation decrease from, I think it was about 10.6% to 10%. But I think it's really important to say that this is only an average. So if you look at a place like Spain, for example, which is one of the reasons why it's so low, Spain, Netherlands and Germany, Spain inflation is currently at about 6%. If you go to the Baltic regions, and you're talking about, you know, Lithuania, Estonia, inflation is at 20%. So it does vary. And rather than, you know, the UK seeing this as an opportunity to think that, yes, low inflation is coming in the near future, I think really there's more pressure now on Christine Lagarde and the ECB to perhaps start reining in their aggressive stance on interest rate hikes. I believe they've risen it by about 75 basis points consecutively over the past couple of months. Are they going to stop that to try and average it out? They don't want to burn out the economy. But again, have to say, you know, we have to wait and see, Laddie, but a bit of good news for Eurozone inflation, and hopefully that sentiment can start sweeping its way across the channel.
Hopefully. Well, we will keep watching out for that. Thank you so much, Juliana.
Thank you.
All right, now let's head on to other markets now. We see the crypto market actually responding, you know, positively, just like other global markets, to what we heard from the Fed chair yesterday about, you know, not going so hard with the interest rate hikes into the December meeting. But we saw the crypto market actually responding positively to that, and we see the sentiment in the crypto space there still in fear this morning, even though we're still seeing the whole FTX implosion still, you know, hounding the market. And we did get, you know, the SBF there talk about his own side of the story, saying he's sorry for what happened with FTX. Well, let's look at the sentiment in the market today. We see it's 27, first day of December. It's 27 points there. Fear, not extreme fear of what we've been used to. Hopefully we can get greed in December. Talking about the Santa rally. Let's look at the market cap, $859.45 billion. It's up 0.82%. We see volume this morning up 2.24%. With buying pressure we're seeing in the market. Bitcoin dominance 38.24%, up 0.22%. Let's look at the price of Bitcoin this morning, 17,122, up 1.57%. It jumped, you know, above that 16K. 16K was looking quite shaky, like it was going to give way, you know, to the bears. But we saw that jump with the good news we heard from Powell yesterday, even though some still say it was hawkish statement. Volume traded $25.45 billion in Bitcoin. Let's look at the price of Ethereum. 1,284, not left out of the party there, up 1.34%. And we're seeing volume still quite low there for Ethereum, $8.11 billion. That was traded. Let's look at the top alts by market cap. It's all green with Matic there, the biggest mover up there, up 6.05%. Was trading at 92 cents per coin. That's Matic. And we see BNB trying to get back above that $300 level, but we're seeing it's in the green, you know, this morning for the top alts by market cap. Let's talk to Gilbert Jopata now, financial market analyst. Hello, Gilbert.
Yes, good morning.
Good morning, Gilbert, and happy new month. Hoping for some kind of Santa rally, you know, in this market, and maybe we're having that right now. I don't know if it's significant enough for traders in this market, but how do you see Jerome Powell's speech yesterday? Some say it was hawkish. Some say it was quite dovish. What do you see?
Okay, you know, the speech was a major event reflecting, looking at more of the economic outlook, labor market, and considering that this is coming before the FOMC meeting on the 14th of December. But I really see the speech to be more positive because he has already shown us the possibility of slowing the pace of interest rate. So to me, that is more of a signs that we are going to see a more slow rate. So to me, it's inclining the sentiment towards a more dovish policy. However, we still expect lots of more data to validate this next course of action. You know, like the non-farm payroll, which will be out by tomorrow. We still expect employment data and that of CPI. All of these will actually validate the next course of action. But you will also agree, I still think we still have a long way to go to tame inflation to the level the Fed will want it to be. There is this data I find interesting from CME that shows that about 77% of persons are more in favor of 50 basis points by next month. Only about 23% still expect to still remain at 75 basis points. But history has always shown us that a pause in rate crashes the market, slow rate rallies the market. So from a more speculative view, I think we are going to see Santa Claus rally this December after maybe we see a bull moderate rate afterwards, which may even go test about the 19,200 level of major resistance before a possible more downside spill before we look for capitulation points.
Right, and also, FTX still, weighing on this matter. We did hear, from the former CEO there, Sam Bankman-Fried, there. He did make some comments, yesterday talking about how he didn't expect, what happened with FTX to happen and how he's sorry. What are the reactions from the crypto community for statements yesterday?
There is one thing we always expect in the cryptocurrency market, and that is transparency. We did not get that from FTX and Alameda, since we actually expected a whole lot from them, owing to the fact that they are a leader in this industry. And that is why the major persons who actually spoke out against them and criticized them actually came from the cryptocurrency community, and not even the mainstream media or the traditional finance. Because if you look at the centralized finance, most times such activity is actually legal in the centralized finance, like such insolvency. But this is not something we want in the cryptocurrency space. So we are not happy, regardless of whatsoever excuse that is given. Moving forward, we expect centralized exchanges to give us proof of reserve. We actually expect regulation to kick into these new neobanks, the centralized exchanges and wallets. We want proof of reserve. We want to see what is coming in, what is possibly going out, and regulation kicking in, so we know that whatever is taking place in that industry or in that space has the interest of its customers.
Yeah, quite interesting. The crypto market always has some kind of swan, a black swan event, and I guess this is, one of them we're seeing, unfold right before our eyes. Thank you so much, Gilbert Jopata, financial market analyst. Thank you so much.
Thanks for having me.
All right, so if we look at the top 5 gainers there, we see GMX there topping the counter, up 13.72% at $50.31. Matic also on the top gainers list. We see Zcash, near protocol, $1.74, up 3.62%. Flip over to the losers counter there. We see it's still single-digit losses we're seeing in the market there. ApeCoin there, down 5.09%. HNT, and we see the king of the meme coins there, down 2.20% at 64 cents. Talking about Doge coin this morning. So that's what the market is saying this morning. We'll still keep tracking to see how the market reacts to all the events happening in the global space. Well, that's a wrap on the program today. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. You can watch this again and all our other shows on YouTube. Just flip over to YouTube, search for Channels Television, check our videos, and you can watch all our productions. Thank you for watching. Happy New Month. Bye for now.